Today is October 12th, 2023. I'm reviewing a personal trade that I made, which was a substantially costing. I traded two contracts on a very volatile stock, and what I now see is looking at a daily time frame. It was very bearish. It was bearish, and then it turned a corner here at about this point on 10/6. And subsequently, for several days, it started to climb, and it created a doji. And I should have been more aware of the significance of what dojis mean. It means that it attempted to go up, but the sellers came in and started to sell, even though there's a small amount of gain. So there's a high probability on the next day it'll either be stagnant or even reverse to the other side. That is something that I should have been aware of. So if I were to imagine this, that would be like going here, doing this, right? Just like that. So like that, right? That means that it is a head and shoulders. That's what it means. And I should be more careful. So this morning, when I was on my cell phone, which is not a good idea to do, I got in here at approximately this point here, about 7:40. And I proceeded to make a little bit of money, and then it started to reverse. By the time I got to the office, it was actually in the red territory by a significant amount right here. And so what I should have done is observed the situation correctly as it was in a downturn. And when I saw this downturn and see this candle here breaking below, that should have been a point where I should have exited my trade with a less loss. I waited until somewhere around here, which created the greatest loss here, somewhere around here. So I need to improve on the fact that I need to keep focusing on the setups. Setups are so important. That is the entryway, and I have to keep reminding myself, but it takes time to understand how that works. So it's gonna set me back uh, probably about a consistent gain of about a week in order to recover that. But that's how things are. And without a stop loss, that was another heavy dose of reality. Even the VWAP was demonstrating this. It poked up, it went down. When it does that, and the VWAP is trending down like that, it is essentially painting a scenario where, I mean, this turned out to be the resistance. It poked up and it brought back down. That should have been, when I'm using my cell phone, I don't see this particular, because the Thinkorswim that I have does not create this settings that I have only on my desktop. So I need to improve on that part of it. So the trade that I should have made was it dropped down. I look at it. Okay, is it clearly signaling uptrend? Okay, so if I were to, because this is indecision right here. It's an indecision that's saying that they can go either way. That's what it's saying right here. That's indecision right there. And when it did that and poked above, I should have been watching it because it's difficult to enter at this point. And when it started to dip, I should have realized that that was a resistance. That was support. And as soon as that support broke, I should have realized that it's going down further. And when it dropped and then it went back up a little bit, attempting to get close to the previous day's low, and then rebound, that should have given clues that the stock is going to be bearish throughout the whole day. That's an indication that I need to be more carefully observant about in trading. So I need to make sure that my timing is correct, waking up physically and moving to here, to the office, and then looking out for the signals and the setups to entry, and then managing to trade based on where the exit point is. When those things click together, the size variance will be able to absorb the 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 disproportionate amount of win to loss ratio, essentially, with with win portion of it being a greater component of that ratio.